The Central Bank of Nigeria says returning to orthodox monetary policy by refraining it from direct intervention in developmental initiative has helped the bank to recover 1 trillion naira under the previous development finance programs. The CBN Governor Yemi Cardoso, who announced this at the Bankers Nite organized by the Chartered Institute of Bankers of Nigeria in Lagos, says the move was achieved through the monitoring and enforcement of different guidelines. Cardoso, who announced the discontinuation of intervention programs last year, says CBN pumped over 10 trillion naira into the economy through different initiatives in sectors ranging from agriculture, aviation, power, youth, and many others. He says the CBN focus now remains on ensuring the effective utilization and recovery of outstanding loans within the framework of establishing guidelines while development finance has a role in the economy of Nigerians. It must be approached with proper governance to achieve meaningful impact. On the outlook, Cardoso projected that with the improved framework for deploying product targeting the Nigerian diaspora and efforts to establish a well-founded FX market, the Apex Bank is anticipating increased diaspora and foreign investment over the next 12 months, building on more resilient and liquid FX market. He added that the Apex Bank has in its sights a monthly inflow of $1 million in diaspora remittance. Earlier, the president and chairman of Council CIBN, Professor Pius Olariwaju, applauded various economic policies of the CBN while he said were already yielding good fruits. He says the CIBN will continue to build capacity building and helping the banking sector through entrenching ethics and professionalism.
Our foremost priority is to achieve price stability with inflation as a central focus. While inflation has shown early signs of moderation, we are fully committed to doing everything in our power to tame inflationary pressures in 2025. We will maintain vigilance through strategic deployment of our monetary policy tools. The monetary policy rate, MPR, will continue to serve as our anchor for inflation management, calibrated on evolving economic conditions and data. The cash reserve ratio, CRR, and open market operations, OMO, will be adjusted as necessary to ensure liquidity levels in the banking system remain aligned with our inflationary goals. The unification of the exchange rate is a pivotal reform, but it marks just the beginning. Next week, the foreign exchange market will begin trading on the electronic FX matching system to further enhance transparency, restore confidence, and attract new investments.
Various policies, regulations have begun to yield fruit. For example, the Nigerian economy continues to be more resilient and agile, as shown in the steady growth from 2.98% in quarter one, to 3.19 in quarter two, and now 3.46 in quarter three of 2024. Likewise, the Nigerian banking industry has also shown resilience this year despite the macroeconomic pressures, such as rising inflation and exchange rate fluctuations, among others. The bank recapitalization exercise also attests to the fact that we are well on our way towards not only strengthening the financial sector, but also supporting the $1 trillion economy envisaged, by 2030. Your Excellencies, ladies and gentlemen, the Chartered Institute of Bankers continues to pursue its mandate of capacity building, entrenching ethics and professionalism among practitioners, as well as empowering the young generation